Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar brings our attention to a significant event. This is the release of the Consumer Confidence Report from the USA, which will be released at 4 o'clock South African Standard Time. Market participants will be closely focused on this key indicator. Additionally, don't forget to stay tuned until the end of this video, as we will be sharing our insightful technical analysis for foreign currencies, indices, and commodities.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar took a slight dip, retracting from a 6-month high against the yen. This retreat came as the US debt ceiling deal boosted risk appetite in global markets, diminishing the greenback safe haven appeal. US President Joe Biden and House Speaker Kevin McCarthy reached a budget agreement to suspend the $31.4 trillion debt ceiling until January 1st, 2025, signaling positive news. As a result, world markets rallied, although trading remained subdued due to a public holiday in Europe and including the United Kingdom and the United States. Now let's turn our attention to the latest headlines on Wall Street. Despite major benchmark averages being closed for a public holiday, US stock futures traded higher. The news of a tentative deal between Joe Biden's administration and Republican lawmakers has boosted sentiment, potentially leading to a positive market movement this week. Moving on to commodities. Oil prices experienced slight gains in choppy trading. Market participants weighed the impact of a tentative US debt ceiling deal, which could prevent a default by the world's largest crude oil consumer, against the potential for further Federal Reserve interest rate hikes that could dampen energy demand. Both benchmarks fluctuated between positive and negative territories, while trade remained subdued due to the public holiday in the UK and the US. However, concerns about another rate hike by the Fed in June have started to emerge, tempering the initial euphoria of the debt deal. Lastly, let's discuss gold. The yellow metal encountered choppy trading, maintaining its position near a 2-month low. Optimism surrounding the debt ceiling deal and expectations of an additional interest rate hike by the Federal Reserve drove flows into the dollar, impacting gold's performance. Now, we would love to hear your opinion. What are your thoughts on the impact of the US debt ceiling deal on the global economy? Share your insights in the comments below. And now, it's time for the highly anticipated technical analysis. First, we'll dive into the analysis for USD JPY, followed by the Nasdaq100, and finally, the analysis for crude oil and gold. In the USD JPY analysis, the Ninja is currently trading within a channel, just below a significant resistance level. A break above the resistance, confirmed by a close at 141.1, could potentially trigger a rally, pushing the pair towards the top of the channel. On the other hand, if it breaks below 140, it could trigger a decline back down to the previous support. Shifting our focus to the Nasdaq100 analysis. US tech stocks are currently consolidating, slightly below the primary resistance level at 14,400. A break above this resistance could lead to a rally towards 14,600. However, if the index closes below 14,320, it might trigger a correction back down to 14,000. Now let's examine the analysis for crude oil. WTI crude oil is still trading within the range defined by a diagonal support and a horizontal resistance. A break and a close outside either of these barriers will confirm direction for this specific commodity. And lastly, let's explore the analysis for gold. The yellow metal is currently trading just above a critical support level at 1,940. If the support is broken, it could trigger a decline towards 1,915.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.